There are so many things I want to talk with you today about that I'm just going to get right into it. There's a few things about macroeconomic events that are going to affect all of us, every aspect of all of our lives. And there's a few things about the economy I really want to point out. And lastly, I'm going to follow up or end with I wrote a special alert to all my subscribers of my newsletter at peterleeds.com yesterday. I'm pulling out just a couple of lines from there that I think I also want to share with you guys. It's very important, and you're going to like this. All the stuff's in this video. And this was the headline from the alert I got from CNN today. Fears of a rising Middle East war. Well, you already knew. You saw this coming. You knew all about it. And it's getting more extreme all the time. And I wrote about that a lot in the alert yesterday. From day one, it was always going to expand. It's a powder keg. It's going to have a lot of effects, so many more serious effects than talking about financial stuff, which is the hardest part about this, but it will have effects on all aspects of the financial system. I'm not even going to get into the details. We've been watching this the whole way, and you probably have a good idea of what's going to happen next. The Chinese president called the reunification of Taiwan with China inevitable in a speech on Tuesday. Xi, who has made taking control of Taiwan a cornerstone of his goal to elevate China's power and stature globally. I've told you all the time that all they have ever said has been, we will take back Taiwan as part of China. All they've ever said. Nothing different than that. That scares me, and it also is a big part of his political power, his whole platform. That's kind of one of his political platforms, is to take back Taiwan. And people are cheering that on the mainland. This is an article from CNBC. I want to pull out exact certain parts or talk about them with you. Thomas A., founder of the Sevens Report, said there's two issues that need to be watched in 2024. Number one, earnings disappointment. We'll get to that in just 1 second. And number two, the total lack of the wall of worry. You guys know how I'm always talking about complacency and the fear index, and when the VIX is low, that means there's a lot of complacency. People are just not paying attention to the risks around them. And I'm not saying that things can't be hunky-dory and house prices go up and stocks go higher and cryptocurrencies go up and everybody does well. But there's a lot more risk that is possible right now than is justifying the way people are acting, which in other words means they're just not paying attention and not awake at the wheel like you guys are. I have to show you even more what I mean as we get into this article. Wednesday's losses came after disappointing revenue guidance from FedEx. Why does that matter? FedEx delivers so many packages as a sign of economic activity, just like the velocity of money that I talked to you about. FedEx is warning that they're not going to be doing well. That's a very bad sign for the activity of the economy, which has so many implications from that point. He goes on to say, now that inflation has peaked and is receding, inflation peaked, you knew when it peaked, a while back, and we talked about it. You knew about it then. And now inflation's come down this much, and now he's talking about inflation peaking. We were talking about it peaking as it was approaching and happening. But you guys are ahead of the game, so just keep it up. But what he's talking about with the earnings announcements or the company's operational results is that you're going to get into more discounting of products again. Most companies seem to be. He's talking about how it's going to impact their profit margins. So then the stock's price might come down because they're making less money or they're expecting to make less money. They announce that. And it's a sign of the overall slowing economy. He says that the underlying fundamentals of the market are still clearly positive. I would say that that's arguable on many facets, and it's demonstrable, it's provable. You can look at actual data from things like the velocity of money, the purchasing managers index, inflation reports. You can look at debt levels, debt loads, what's the operating deficit of the country. All these things tell you a story, and the story is showing economic weakness all around. So when I see somebody say a comment like that the economy is still clearly positive, then it annoys me. And it also annoys me even more when they jawbone and they say the economy is still strong because the unemployment rate is so low. That's a part of a bigger picture. The economy is showing signs of weakness all around while we're living off of debt on a personal level, but the actual government itself, also the municipalities, a lot of corporations. So we're all spending a lot on our credit cards. That's not meaning that we're wealthier. I just want to quickly tell you a couple of points of this alert that I sent out to the subscribers of PeterLeeds.com newsletter yesterday because it's poignant, and I think that a lot of these comments will actually help you understand ways to look at the economy and see it in a brighter light than you're being told to see it in. The majority of investors expect inflation to continue to slide lower, 2 to 3 rate cuts in 2024, gold prices to keep climbing, stock markets to keep climbing, real estate to remain strong. And I'm going to talk about how the consensus is usually correct, but when they are not correct and everyone's looking the wrong way, that's where there's big losses and massive opportunities. They talk about a few hot topic issues about inflation, interest rates, that sort of thing, but I want to show you the parts here. While 2023 was the year for gold, 2024 will see the high quality gold mining stocks soar much higher towards appropriate values given the all-time record prices for the precious metal. By the way, none of this is personalized trading advice. These are just comments that I made. And I'm going to say that I expect real estate prices to fall in 2024 as interest rates come down. And I get into why that's going to happen. That's the theory of what's going to happen from this point or from this viewpoint. But I also wanted to mention that something like 55% of real estate agents are having trouble paying their rent on their offices. That's a unique sign that's telling you something very serious. People who have not been able to move or unable to afford a house in the tight inventory, high interest rate environment of the last few years now can and will start taking action. Thus, housing inventory will suddenly begin returning to historically healthier levels, which will come along with decreasing prices. I think that process will start in 2024, and I think it will then accelerate over time, especially and based upon how quickly and how low interest rates actually go. Well, here's the part I wanted to read to you, okay? This is in the summary, just the beginning of the summary, and it tells a lot about my personal expectations and beliefs, but check it out. There's a lot of friction and chaos worldwide right now, and an unprecedented level of economic commotion, both here and the whole world over, actually. That means opportunities will be more numerous and much more significant in 2024. And I went on to say, my New Year's gift for you for 2024 is a small little bit of investment wisdom. Remember that the louder the voices get telling you how strong the economy is, and the more numerous they are, the closer you are to a financial breakdown, like a currency crisis, or a banking crisis, or a repo emergency, or some serious bank runs, or any of the dozens of possible events. All of these examples are far more likely to appear now than they were at this time last year. That's not an opinion. Consider it an observation. And please be hyper vigilant in 2024.